we're starting to reflect on the first half of 2026. It's Monday, June 22nd, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell, share it with your friends, family, colleagues, anyone who's interested in that economic data, what it means for investments, and what it means for the market. Today, we're going to focus a little bit differently. We're going to address the top 5 questions that we've seen in investors' minds right now. First of all, is this it for the U.S. and Iran war, a peace deal? We have an interim deal. It's basically a ceasefire for 60 days. There's still 3 things that we want to get more clarity on. It's the Strait of Hormuz, how quickly, how efficiently this will move through to bring those supply and production. Secondly, the Iran nuclear program, will that be completely stopped? What is the deal on the moratorium? And then third, what is the situation between Israel and Lebanon? Are they coming a part of this peace deal as well? The second question is, when will we see the relief in energy costs? We've already seen gasoline prices come down about 10%, but at the same time, crude oil prices have come down 30%. This takes time. Production and transportation will take time for us to see an ongoing decline in gasoline prices. Third question is, when will the Fed raise rates? We do think that inflation is sticky at this point. We will get a lot of volatility with inflation because of the up and down in gasoline and energy costs, but the underlying inflation is still there. We do think that this will lead the Fed to likely raise interest rates in the second half of this year. The exact month, we're not sure. We think they'll start with 25 basis points to give them a little bit of leeway. The fourth question here is, are equities expensive? We've seen equities making record highs. Are they expensive at these levels? From a price to earnings valuation multiple, no. We've seen basically flat PE expansion this year, but yet earnings are very optimistic for every quarter from here on out. You're looking at 20% plus year-over-year earnings growth for every quarter through the rest of 2026. This might be a little optimistic given the anticipation that the Fed may need to raise interest rates in the second half of this year. The last question kind of surrounds earnings season. Will this Q2 earnings season that starts in July, will that support this rally? First of all, the big thing is that earnings have been driven by technology, financials as well. But from a technology standpoint, investors are going to want to look for real revenue that comes out because of the excessive spending from an AI standpoint. That has continued. Their tolerance for this has continued to decline in recent quarters. So we want to see if there is some real revenue that's tied to this excessive spending. So bottom line, we are still on the buy on the weakness, not sell on the weakness mentality, because we're constructive about the U.S. equity market long term. But we are very patient and very diligent on what we're looking at within that equity market. Right now, we do think there's too much optimism priced in. There's not enough reward for the risk that's in the market right now. We're staying patient. We'll look for opportunities, and we may get that through the summer months. Remember, we are approaching a period where we may encounter some seasonal weakness from an equity perspective. Thank you very much. That's all we have today. If you want a history of our podcast, please go to marketswithmegan.fm. Thank you.